hanging in there.
As long as you're breathing and fighting. Okay, how did the paper go? You guys not happy with the paper? You don't want to tell me how it went. Sorry? Guys, how's the paper?
Ayuna,
Good evening.
evening. Yeah, it was fine. For me, I started to attempt it later, so I did not manage to finish due to time constraints. But the performance which I got, I was fine with it because I scored better marks.
Okay, that's good to hear.
Considering how many points my solution points I put, so I managed to score a little bit better.
Okay, I'm glad. And you felt good when you were writing it, right?
Yeah, I felt good, and also the way I did it, I felt good with it.
Okay, that's good. That's good. Anybody else want to share? See, Lifa says not bad, just a lot of reading to do. Auditing as always. Yeah, it's a lot of reading to do with audit. It just is like that. Unfortunately, you must sort of learn to love reading. Anyone else? Anyone who feels that it was bad and maybe wants to share a specific area of struggle? I mean, it was only one required part, but I mean, maybe if from a risk assessment perspective, you generally struggle or...
Hi.
Hello.
Hi. I found the question a bit difficult to interpret. Not the part where they were asking for risks, but there was the few lines afterwards about specific lines. So I found that part a bit difficult to identify even in the scenario. So I did perform not too bad, but I was hoping for better.
Okay, fair enough. I did see that last part that made reference to assertions and things. Is that the part that you're talking about?
Yes, that's the part I'm talking about.
Okay. Anyone else?
Hi, Renate. On my side, I felt like I covered a lot of points, but then I didn't go deep into details because when I'm looking at my requirement, it's like all the points are there, but then not all of them, but most of them are there, but then they are not into details.
So you didn't go into detail because what, you didn't have time, or you didn't go into detail because you weren't sure what detail you needed to go into?
I'm not sure. I think I was just thinking about time and like just seeing the risk, and I'm like, okay, this is the risk, and it's the risk because of this. But then maybe on some of them, I was not going back to the scenario and say what will happen when that risk happens. That last part.
Okay, I hear you. Is there anyone else who wants to go before we jump into the paper itself, and then we actually see what's what. Hi.
I also share the same sentiments with, I think, the second or third speaker on the last part for the sessions. I got really lost and I totally didn't attempt. I just did like the risk. And then with the risk again, I think I also still have a bit of gray areas on how to word it, like to bring it out. Do you then put an impact at the end? So I think that's where I struggled. My mark wasn't bad, but not also good.
Okay. That is fair enough. Okay. In terms of my screen, can you guys just confirm that you can see my screen?
Yes, we can see.
Okay. I'm going to jump to the required so we can analyze the required like we did last time. It's not a very long required. Is the font size large enough for you guys to read? It's legible?
Yes, all good.
Okay, cool. So the required says identify the risks of material misstatement at the overall financial statement level, as well as the level of individual balances, transactions, and assertions in regard to the audit of RVQ's SA, Pty Ltd for the financial year 2024. So when we look at it, okay, they ask us to do it for 19 marks. It's quite a big mark allocation. And then they say that they'll give us Y1 if we can show critical and analytical thinking skills. Okay, so looking at it, what goes through our minds? What are we thinking?
Hi, Onati.
Hello.
Let me just try. So when I read it, so I think the tricky part is the next point. The first point is very clear that the risks of material misstatement at financial statement level. So when it says as well as at level of individual balances, transaction, and assertions, it's something that I'm not used to seeing. So normally I see it's either at financial statement level or assertion level. But I had to conclude when I was reading the required that if I then have to cover assertion level and financial statement level, in assertion level, I have to discuss the individual balances and transaction. So these two fall within the assertion level. That's how I interpreted it.
Yeah, that interpretation wouldn't have been off. You're quite right. We've got to identify risk of material misstatement. And we all understand that risk of material misstatement can be done at an overall financial statement level and then also done at an assertion level. You correctly bring out that when they talk balances and transactions, that they're basically talking line items. And that gives us the clue that we're looking at assertion level. And then here they were quite frank and very straightforward. And they said that we've got to look at the overall financial statement level. So when you're looking at it, it says identify, right? So from an identifies perspective, what sort of level of detail are you thinking?
Hi.
Hello.
I'm thinking maybe I have to state the risk and explain just a little bit the impact of the risk.
When you say just a little bit,
Maybe just to bring out the impact of the risk. Like you don't have to write like a long paragraph, but maybe in one line I just state the risk and its impact. That's what I'm thinking.
When you say impact, maybe just give me an example. You guys are saying state the risk and its impact. Give me an example of the impact. What does that sound like? What does that look like?
I will not.
Hello.
Yeah, so for me, I think that's the biggest challenge that I faced on that, because the impact that I noted on Rome, it's going back to one issue where we are saying this issue then leads to financial statement being materially misstated. So every other point then leads to that point of having our financial statement being materially misstated. So the triggers will be varying, the output to be varying, but the impact is the same.
So agree, because at the end of the day, the impact is that so we have a risk, okay, a risk that what can happen, that there can be material misstatement. So material misstatement for me would be the impact. If you wanted to go into detail, you could then categorize your risk, but then you would be going into a risk assessment in terms of determining whether that risk is low, medium, high, or significant, right? But at the end of the day, the impact is that there's going to be material misstatement, or there's a chance that there could be material misstatement. So I don't know that I'm all together with saying that you identify the risk and then you discuss the impact a little bit. I don't know that I'm all together with that one. Is there anybody who feels differently? Nobody feels differently. Today you guys don't want to talk to me.
Hi, Unati. No, we don't filter it. I think that's how I write. Like, I didn't put there's a risk that financial statements may be materially misstated.
Yeah, so you're stating something, right? There is a risk. What is the risk? That financial statements may be materially misstated. Do you stop there?
No, I then state, like, due to the fact that, for an example, maybe they don't have knowledge on IFRS 9. So I kind of like I state the trigger and then the impact, and then go back to explaining the trigger.
This impact word that you guys use, when you say explain the impact, you're saying explaining the impact by saying there is a risk of material misstatement. Is that what you mean? Or is this a different impact?
Okay, from my end, explaining the impact would mean now like stating what is in the scenario. To say, like, for an example, let me word it. Maybe let's say, for an example, it's a group. There's a risk that annual financial statements may be materially misstated due to them failing to eliminate intra-group transactions, or due to the complexity of IFRS 10. So the last part to me would be explaining the impact.
The last part to me sounds more like the trigger. It sounds like a risk factor. And I think as I'm listening to you explain, and given the silence that we've got in class, it makes sense why when the question says discuss the risk factors, that people don't get it. The risk factor is the piece that you got from the scenario, right? So the fact that they are in a group setting, right? Then you understand being in a group setting means that there's consolidation, which in its nature can be complex. Therefore, there is a risk of material misstatement because of the complexity that comes from consolidation, isn't it?
Yes. So the explanation of the trigger is the risk factor, and then the fact that you say there's a risk of material misstatement is the impact.
Yes, because what does impact mean?
Is the outcome of what's going to happen.
Yeah. So because there's consolidation, which can be complex, we understand in its nature, something can go wrong. And that in itself is misstatement. Remember, risk is what can go wrong. We can have material misstatement. Why? Because there's a group, and that means there'll be consolidations, which in its nature is complex. So for me, when I say identify the risk of material misstatement, I'm looking for you to tell me from the scenario, what is the risk factor? Then explain to me why that creates a risk of material misstatement. And that's it. That's all you have to do. So the information you got in the scenario was that it's a group. You know that groups can have material misstatement. Just explain why. Because they are complex when it comes to consolidations, or there are complexities involved in eliminating transactions on consolidation, however you want to explain it. But the explanation for me is sort of the why. Why is this one factor, which is the group structure, a risk of material misstatement?
Okay, that's noted. Thank you.
Okay, cool. Then they talk overall financial statement level, and then we are reading and then we're piecing together that the second part of this is talking about assertion level. Is everybody happy with the difference between overall financial statement level and assertion level? I was hoping for a chorus of yes.
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 Okay, great. Then they are very specific to say that they want us to look at the audit of RV Cures SA Pty Limited. So when we get into it, we need to focus on RV SA Pty Limited. Yes, note the other companies that are being mentioned, but in terms of what the required is asking you for, it's asking you from the perspective of those who will be auditing RV Cures. Okay. And it's for the 2024 financial year. They want you to use critical and analytical thinking skills. How do we understand that the mark regarding why one works?
I think you get it like when you're able to link back to the scenario.
So by definition, for the IAC, they actually define it as being able to research, investigate, critically analyze, reflect, and apply professional judgment to the evaluation of data and information from a variety of sources and perspectives. So in a question like this, in terms of the risk of material misstatement, you would need to have some sort of a level of integration, right? Which means understanding things like consolidations in their nature are complex. That's pulling in your accounting knowledge. That's one source. Applying judgment, understanding that this is a group, knowing where in the group you are, right? Because consolidation doesn't affect the subsidiary. consolidation affects the parent. So just because you see a group structure, here they're talking about RV Cures, SAPTY, and if I remember correctly, this is the subsidiary. So you won't say that there's a risk because there's a group because of the consolidation being complex, because the subsidiary is not consolidating, the parent is consolidating. From a subsidiary perspective, there could be a risk in terms of the application of accounting policies, right? Because the subsidiary would be getting its accounting policies from the group. Something like that impacts the subsidiary. And critical analytical thinking skills is part of that, being able to use that information, analyzing who exactly you are and what impact is there based on a singular piece of information, such as being in a group structure. Being in a group structure means one thing for a subsidiary, but it means a completely different thing for a parent, right? Struggle with this group because you guys are new to me and I don't know what your silence means. It's like every time I have a new group of candidates, you get to learn what the silence means. And I don't think I've figured out in this group what the silence means.
Means we are following.
Okay.
We are following.
Okay, great. Okay, great. I like it. Okay, so is everybody happy in terms of the required and what it is that we understand that we should be doing? If you think about it from a structural perspective at this stage, you could maybe want to say you'll have two headings, a heading that says overall financial statement level risks and assertion level risks if you wanted to. 19 is an odd number. Maybe you would want to say try to get 10 and then get 9. It's not very clear, right, as you have the required. But I mean, as a baseline, that could be a starting point just for you to sort of go in and focus. So maybe start by going in and looking for 10 risks at overall financial statement level. Or how did you guys approach this?
From my side, how I approached this, I did the same as you're suggesting, the two headings, right? But then from a scenario, I started at the top. Whatever I see as a trigger, I put it in the right bucket. So if I'm reading through and I see something triggering going concern, then I put it in the overall, and then I proceed to the next. That's how I.
Okay. That's also a good approach. Another approach is based on the risk factor itself, right? In the scenario, I actually like what you say is that you start at the top and you go through it. So basically on a line-by-line approach, asking yourself, this piece of information, does it introduce a risk? What is the risk that it introduces? And then just sort of bucketing it accordingly. Or you could go by the same approach of starting at the top. As you pick up a risk factor, you then create a heading for your risk factor, because sometimes one risk factor can produce multiple risks. Then you're able to bring in a risk factor as a heading and then list all of the risks that fall under that. In terms of wanting to be specific to show that you've considered overall financial statement level and assertion level, you could for yourself make a legend on your page, because they say you shouldn't use an abbreviation if you haven't previously defined it. So you could make legend for yourself and write OFS equals overall financial statement level, and then write AS equals assertion level. And then, you know, as you write each risk, you can write at the end OFS or AS or AL, however you would have wanted to define it. From a marking perspective, that is also acceptable. If you don't like the structure of having to jump to the top of the page and then to the bottom of the page and then the top of the page, or maybe two separate pages if you were using two separate pages. So if you don't like jumping between the two headings, it is also acceptable to use a risk factor and then bring in your risks and then use an abbreviation. Just again, remember, please, if you use an abbreviation, you must have defined it somewhere before. You can't just use an abbreviation and assume that the marker knows that OFS means overall financial statement. Okay. Right. Any questions on the required before we jump into the scenario?
No, we're good.
So it starts by telling us that you are a first-year trainee in a multinational audit firm and are planned on the audit of RV Cures Proprietary Limited. Your team is presently engaged in planning the audit for the financial year ending 30 June 2024. So financial year 2024. RV Cures was established in 2019 as a South African operation of RV Products International, so RVPI, and specializes in the manufacture and distribution of natural remedies. The shareholders of RV Cures are as follows. RVPI, which is the international company, is the parent company, which has its headquarters in London, and they've got a 75% shareholding. And then we've got Mr. Loon Toon, who's the managing director, and he's got a 25% shareholding. From the information that we've read now, is there anything that you guys think is noteworthy?
Yeah, I think, being a first year, um, creates a risk in this kind of audit, taking into account that it's a multinational audit, which is another risk because it puts strain onto the internal controls. Um, you can't control the company the same way um, in America, in South Africa, in Europe, because of the tax laws and other sovereign risks that is included in there.
Okay, so the control risk that you're bringing in, you're bringing the control risk as a result of the fact that it's multinational, right? Not because we're a first year. Because you mentioned two things. You mentioned the first year part, and then you mentioned the multinational part.
Oh yeah. The first part was that me being a first year and such a huge audit was a risk for not picking up material misstatements. Then the second part was that of the controls, because the company is in like different countries.
Okay, so let's maybe fix the first part. You're saying that because it's a first year trainee and this is a very big audit, there's a risk that we might not pick up misstatements, or that the first year specifically might not pick up
Yes,
misstatement,
because for
right?
example, yes, because the like in the text, they could have mitigated that risk if they had enough, let's say, guidance for the first year, but they didn't mention anything.
Okay. What risk is that? Let's maybe talk about audit risk. What are the components of audit risk?
Audit risk is inherent risk,
Yeah.
control risk, and then the last one is the audit. Then it's the audit risk. Yeah.
The last one is detection risk, which is the
Detection.
risk
Yes.
that the auditor might not pick up a material misstatement. Now, when we talk about the risk of material misstatement, what are the components of the risk of material misstatement? We just unpacked the components of audit risk. Now I'm asking, what are the components of the risk of material misstatement?
Oh, it's just the inherent and the controls risk.
That's correct. So risk of material misstatement is only inherent risk and control risk. Detection risk does not feature. Detection risk is a function of audit risk, which is actually very largely risk of material misstatement and detection risk. But then if you unpack the whole thing, it's inherent risk, control risk, and detection risk. But we know that inherent risk and control risk is actually risk of material misstatement. So to be technically correct, risk of material misstatement, audit risk is risk of material misstatement and detection risk. Okay. Very happy with the identification of the multinational, the South African operation in an international company that presents a risk, right? There is a risk of material misstatement based on whatever laws and regulations might be applicable in the South African company versus what might be applicable from a head office perspective, and that can definitely impact the controls because controls very largely also come from laws and regulations. Okay, happy with that. Anything else that you guys think is noteworthy, either from a risk perspective or something that we would, want to keep in our minds?
I think from this paragraph, this is where we identify that we are in a group setting, and because then you're told that there is a parent with 75% and then there's 25%. Therefore, you also identify that in that group you are the subsidiary because there's a parent holding 75%.
Yes, quite correct. So from an analytical thinking perspective, we've analyzed the structure and we've deduced the fact that we are a subsidiary in a parent or in an international group, meaning that we are not the parent. And when we have group considerations, our considerations should be limited to the fact that we are a subsidiary. I'm happy with that one. It's not a risk, it's a mind framing contextualization. I'm looking for another contextualization that I would have wanted you guys to pick up, a very obvious one that a lot of people sometimes overlook.
Hi.
I'm not sure if this. Oh, okay. Please go ahead.
Okay. I think I've noticed that Mr. Loon is the MD and is also a shareholder of the 25%. So that might bring in an override on the controls. Management
We
override.
don't know yet what the rest of the executive look like, right? Because this is just the shareholding. It's not the governance structure. So that consideration is a little bit premature based on what we've got right now.
I think it's the industry that we are operating in.
Okay.
And the fact that the parent company is in London, almost like how we're going to present our Fs, like the functional currency.
Okay, so the functional currency, a very good consideration. At this point, we don't have enough information to conclude on that, right? But we would want to know in the back of our minds if there's a functional currency issue. I just want to take a step back to the person who said the industry. I said okay, but the okay was not like a okay full stop. It was like okay ... question mark. So
I'm wrong. Sorry, I can't raise.
Sorry?
I thought maybe you're saying that okay was okay, that I was wrong.
No. It was okay ... question mark. I just want to understand. You're saying industry, but you're not saying is the industry a contextual thing? Are you identifying a risk from this industry? Why are you noting the industry?
So normally in the industry we have like laws and regulations. So there will be a risk probably for not complying with the laws and regulation of the industry. Because for now we are in manufacturing and distribution of natural remedies.
Okay. Are you looking at it from the natural remedies perspective? They've not really said anything as yet, right? And so if you remember what we spoke about on Saturday, I said we start with the very obvious ones, and then later we'll add, this is one that I would keep for later to say in the natural remedies flow, there could be a lot of laws and regulations if these things are being consumed, right? So from a consumer perspective, there might be a lot of stuff, but they haven't said anything to us about laws and regulations explicitly. So I would keep that one in the back of my head. What about the year end, guys? Didn't you guys learn in undergrad that when you see the year end, you highlight it and then you start to make a timeline?
Yeah, we forgot about that.
I think somebody mentioned it in the chat.
Oh, sorry. If there are people who weren't in Saturday's class, when I've got my screen shared, I can't see the chat, I can't see hands. So please just unmute and then speak.
Sorry, Unati.
Yes, I'm saying please don't rely on the chat. I will check the chat periodically, but it is difficult for me when I've got my screen shared. So I would prefer that people just unmute and then speak. Also, please do not raise your hands, just speak.
I just wanted to ask, someone said something about the industry. I picked up in the scenario that has to do with the health industry. Isn't that industry inherently heavily regulated?
It is. That's why I'm saying it's a valid consideration. It's just not one that I would put right at the front because the scenario has not said anything about, heavy regulation or something like that. Normally with the ones that are a little bit outside of the accounting zone, they normally give a little bit more information before they really expect you to pick it up as a trigger. So a valid consideration, I would just keep it sort of tucked in for when I'm struggling to think of or struggling to find what is very obvious in the scenario. Because it can be said for all industries. All industries are regulated. Majority of industries. I don't know. I can't think from the top of my head apart from the taxi industry, but they don't produce AFs. I don't think taxi drivers produce AFs. But apart from the taxi industry, aren't all industries regulated? So it's kind of like a generic consideration, and unless you've got something specific in the scenario that's pointing you towards that, right?
Mm.
Unless you share a different view, you can just tell me.
Just to also ask there, Unati, like when it says specializing in the manufacture and distribution, is it also a bit quick for us to think of like, is it decentralized? Is it centralized? Is the internal controls around this manufacturing and distribution?
You can think about it, just don't write it down immediately because you need more context. Remember, we're saying we're looking for the ones that are obvious, the ones that shout at us. Here they are saying it's an international company that has a subsidiary. We are the subsidiary. That is obvious.
Okay, thanks.
Okay, and then from an accounting perspective, because we're in the CA jurisdiction, they're expecting you to apply your accounting knowledge to then understand, okay, well, I'm in a group setting and group structures can generally, or consolidations in their nature, can generally be a bit complex. Somebody mentioned something about the functional currency, a very valid consideration. At this point, I wouldn't write it down yet because we don't know that they use two different functional currencies. It's not yet been explicitly stated. But if I read the whole scenario and at the end, I don't see them saying it, and then I look at my paper and I've only got 15 things and I need to push it to get to 19, then I will say that because they are in two different jurisdictions, there is a risk that they're not using the same functional currency. And so on consolidation, that could cause material misstatement because IAS21 can also be a bit complex if you want. That's just an exam technique thing. It's not to say that the consideration is not valid. It's just that from an exam technique perspective, you're expected to start with the obvious. And that's why I said also on Saturday that you get a solution And your solution, yes, it's got a specific number of things that were identified by the examiner, but that's what the examiner thought or what the examiner wanted you to bring forward. And so they gave you information in the scenario that they expected you to pick up in order to produce this. It's not to say that if you don't see your response on the suggested solution, that it's not valid, because the solution at the end of the day is a suggestion, which is why it's important to read and understand the scenario, and why that application, we keep emphasizing application. If you can't bring in proper application, then you're probably doing what we call shotgun approach, and that's something you should do only at the end, not right in the beginning. Okay. Are we happy?
Okay. I have a question
Yeah.
for the industry. So I normally have like a trigger that I go in the exam with, where you say they may fail to comply with the industry regulation. So I wanted clarity on something that you mentioned. I kind of didn't get it. Because
okay, I was saying that it's fine to have that as a consideration, right? From an examiner perspective, based on, and I'm going to say this based on the numerous questions that I've seen, they very often will say this industry is heavily regulated, or they'll bring in something about a new law or a new regulation, or the minister in this industry did this or whatever. That's sort of like a direct trigger to say, we want you to talk laws and regulations, right? If you don't see something like that, it's not to say that it's not in the suggested solution, because the suggested solution very many times has more marks than the actual mark allocation that you see in the required. That is something I would keep for the end. I would first try to start by listing everything that I see as obvious direct triggers from the scenario. And then if I run out of points, and the mark allocation is still not complete, because you've got to write at least 19 to 20, maybe 22 points from an exam technique perspective, I would then fill up with the other ones that are kind of a bit generic. The reason why I'm saying that is that you can't just see an industry and then automatically say that there's a risk of non-compliance due to laws and regulations. And the reason for that is because it's a very generic risk. Every industry has laws and regulations because every industry is regulated. So that would be a point in every paper, but sometimes the examiner is trying to steer you in a specific direction. I hope that this makes sense.
Yes, thank you so much.
Okay. So the year end, guys, you've got to plot your timeline once you realize what the year end is. The year end is important, not just in a risk assessment question, but even in an audit planning question, or a actual performing of substantive procedures question, whatever the case is. The reason for, and in finalization, the reason for that is that your year end speaks to pre-engagement. Your year end can also speak to your subsequent events. Your year end then also speaks to potentially any provisions, and then understanding as well if you've got litigation from a subsequent events perspective, whether you've got an adjusting or a non-adjusting event. So the year end is important. It can guide you in very many different ways. Not to say that it always forms part of your response, but you should have it in your mind when the year end is, so that you can contextualize other information as you get it in the scenario. Okay. A lot of people forget it, but you shouldn't. Okay, then they say your audit firm has been the auditors of RV Cures since the incorporation of the company. The audit deadline for the sign-off of the financial information pack to the group audit team in London is 16 July 2024 to enable the group auditors to sign off the group annual financial statements of RVPI on 4 August 2024. RVPI issued a SENS announcement on the New York Stock Exchange, noting that it will publish its annual results on Monday, 6 August 2024. All other group company annual financial statements should be signed off by 31 August 2024. The group audit team communicated that the component materiality should be calculated using 1 to 5% of profit before tax. However, the 5 to 10% of profit before tax can be used for the audit of the financial statements. There's a lot of dates in this paragraph.
I think from my side, I can pick up, like just you were saying, that year end is very important. Like I could see from 30 June, and there is a deadline of 16 July. That's literally 16 days after year end. How on earth would you have done an audit and finished it? So there's a very tight deadline there, which creates a risk.
I love that, right? Also, if you think about it, it says here that the financial information pack that needs to go to the group audit team, the sign off of the pack from the audit team, that is the audit deadline. When do companies normally close off their books? I mean, if your year end is 30 June, when are you posting all of the entries that relate to year end in order to close off your GL, close off your trial balance, do all of your allocations and things before you put a pack in?
During the month
Probably
of the year end?
It's during the month after year end, which is what July is. I'll make an example where I work. We submit packs to group on work day 7. That's work day 7, not calendar day. This is 16 calendar days. If work day 7, normally like maybe 10 calendar days, then there's only 6 days to audit. What? Doesn't make sense. Then, so definitely, yes, agreed that there's a very tight audit deadline, and that's bringing in a risk because year end is 30 June and the audit deadline for the subsidiary is 16 July. What else do we pick up here?
The parent company of RV Gears is listed on the New York Stock Exchange.
That's a fact, they are.
So then it means that the presentation currency may be in dollars. So there could be a risk of translating the balances in the financial statement of financial position to like they could use the average rate instead of the spot rate.
Okay, so similar to what one of your colleagues said, that is a valid consideration. At this point, we don't know what the functional currency is. So that consideration, I would just put it in my arsenal for when I'm running out of points, and then I'll bring that point in. So yes, very valid, but we don't have a direct trigger that tells us that they are using 2 different currencies. We don't know that yet. It could be that the functional currency for the South African operations is in dollars. We don't know that yet. Okay.
I think if the risk will be the fact that since the parent is listed, so the subsidiary must follow the policies that are used by the parent. So there could be a risk that since the subsidiary is from the South African side, they might not apply the policies as per the New York exchange requirements.
So one of your colleagues had brought up the controls and legislation and things like that. All of those considerations I would lump together. And then just to correct what you're saying, it's not because it's listed that is the risk. The fact that it's listed doesn't bring the risk that they might not apply the group's policies. The fact that it is in a group means that they might not apply the group's policies. So whether it was listed or not listed, there would still be the risk from a control perspective and from an accounting policy perspective that there's not consistency in the application of those things. Okay.
I will not. Can I also just maybe, because I was just thinking about it, right? So from, the fact that we're reporting or RVQ's reports to the listhead, I looked at it from a management point of view that if you were at management side of things, you would probably be under pressure to report good results. And I know it's not specifically said in this paragraph, but it's just something I looked at to say, okay, they probably would be under pressure to report good results to the listed, and that could appear a risk of material misstatement to financial reporting.
So for me, again, one of those where I would need more context, and I'll explain to you. So it's a valid consideration. I would just want more context to know how big is the group, and how much of, or how material is this subsidiary to the group as a whole? Because if the subsidiary itself is not all that material, it could be material from a component perspective to say it's material enough for us to audit, but is it material enough that if they overstate, that it will cause material overstatement on the other side? And maybe as I say this, I'm really hoping that it's going to click that there's two different materialities. Group will have a different materiality for the consolidated financial statements, and then there will be a materiality for the component. And normally the way that the group audit works is that you set your materiality for your components to a level that even if you sort of have material misstatement in your component, the material misstatement in your component doesn't necessarily impact or is not necessarily material yet for group. So it will be something that maybe group will carry on the SAD and on the sum, so on the schedule of unadjusted differences, but not material enough to impact the opinion of group. Does that make sense? The subsidiary has to have a lower threshold. And the reason for that is that you could have a group structure that has multiple subsidiaries. And if you take all of the misstatements of all of those subsidiaries together, if the materiality at your component level is not low enough, you will automatically then have misstatement at a group level, and you don't want that. You want your component materiality to be controllable so that if you are having material misstatement at some of the components, you can still carry it in the group schedule of unadjusted differences without impacting the group opinion. Now that I've said that, if you read this statement, do you think that they'll be able to achieve that given how the group auditors have communicated component materiality and the levels that they've communicated?
No.
No.
Yeah, because if they choose the lower threshold, then they've got a problem, right? Because if you've got 5 to 10% for your components and then you've got 1 to 5% of the same benchmark, you're going to have an issue. You might find yourself potentially having misstatement. Okay.
Sorry, Unati, with the materiality levels, so the 1% to 5%, is it for the component, and then the 5 to 10, is it the group?
I understand to be
confused me.
The group audit team communicated that component materiality should be calculated using 1 to 5%. of profit before tax.
Okay.
And then 5 to 10% can be used for the audit of the financial statements. I suppose maybe they should have said for the audit of the group financial statements.
Okay.
Because the component part to me is clear, but I do hear what you're saying. On the group side, it's a little bit iffy. But I think for me, the component side is clear. It's clear that the component materiality should be calculated using between 1 to 5%.
Okay.
Okay. If you were still confused there, a key would have been the fact that you've got the same percentage of 5% on one side and 5% on the other side. And so potentially you could find yourself with the same materiality, and a component and a group should never have the same materiality. Okay. So that's also just another way to look at it if you're confused by the wording.
Sorry, Unathi. So
Yeah.
are you saying that we have a risk factor here?
Yes.
What is the risk factor? Sorry, just to put it in. I'm failing to understand.
So according to ISA 600, I believe, which is group audits, it says that your subsidiary's materiality should not be more than your parent's materiality. That is a risk for both the parent and also for the subsidiary because it means non-compliance with ISA 600.
Okay, thank you. Technical.
It's not that complicated, guys. It's not that complicated.
This is when you see the technical gaps.
Yes. Okay. There's one more thing in this paragraph, and I believe I gave you guys a hint when I unpacked the importance of year end. If the group financial statements are going to be signed off on the 4th of August, right? Which is 1 month and 4 days after year end. When is the component team going to do subsequent events? Is the subsidiary going to have enough time to do subsequent events?
No.
No.
Yeah. And then also it's 4 days after month end. 4 days after month end, right? Let's assume that month end was on the Thursday, so maybe the 31st of July. The 1st of August is a Friday. Then you've got Saturday being the 2nd of August, Sunday being the 3rd of August. If Monday is the 4th of August, when are bank transactions going to clear? How are you going to do subsequent receipts testing? How are you going to do unrecorded liabilities testing? It's not going to be possible, is it? Because the group is signing off and then they're going to post it on the stock exchange on Monday the 6th. Okay, we know it's Monday the 6th. But in any case, even if it wasn't Monday the 6th, and even if it is Monday the 6th, can you do subsequent receipts testing 4 days after? Because remember that the payables clerks still need to allocate payments. The bank clerk still needs to put together a bank recon. Your supplier person needs to put together a supplier recon. If there's disputes with your supplier, those things need to be hashed out. That doesn't happen 4 days after month end. Okay, so yes, it's a tight audit deadline, meaning in terms of doing the actual execution, but also a tight audit deadline when you look at finalization procedures, which includes subsequent events. Happiness.
And then, Unathi, what about like cross reviews? Like, would that also be a risk that there's minimal time to check the work that was done?
It does mean that, but I wouldn't write that down because we haven't been told here that there's a quality assurance person that has been assigned to the subsidiary, because that would depend on the group audit plan. So if they told us that part of the group audit plan is that this component is so significant that they need quality assurance and cross reviews, then definitely there's no time to do cross reviews.
Okay, so the group auditors just take our work and then They don't
They
check
don't
it.
just take our work. Remember, ISA 600 says that you evaluate the competence of your component auditors. They've already evaluated our competence. Okay. It's not in every group where you have quality assurance. And yes, it's a listed company, but we don't know that this is the only subsidiary in that listed company, which goes back to the point that I made before, is that if this is a group that has many subsidiaries, if this component is not that material, they wouldn't have assigned quality assurance. They might have assigned quality assurance to the more material components. That's why I'm saying it's a valid consideration, but we don't have enough information to conclude that. My problem with putting information like that first is that that information includes assumptions. You want to first include information that doesn't have assumptions. Then at the end, if you're running out of points, you can start to make assumptions. First, use what the examiner gave you. The examiner gave you 3 pages of information. First, exhaust the 3 pages of information before you start to assume things.
Thanks, Unati.
No problem. Your team is counting. Hello.
Hi, sorry to take you back a bit. Oh, I want to understand something about materiality. That risk factor, is it not triggering the detection risk?
It triggers detection risk, right? But you can't pick up if you've actually got risk in your financial statements, or rather, your risk in itself is going to be wrong. So if your level of material misstatement, remember we're looking at risk of material misstatement. If your materiality is wrong, you've already got material misstatement. How can you pick up risk of material misstatement properly, or how can risk of material misstatement be identified? Because they're asking you to identify the risk of material misstatement if the materiality is wrong. Is that making sense?
Yeah, noted, Unat. Thanks.
Cool. Your team is counting on the competence of the accounting staff to ensure that the deadlines are met. And because the financial director, Mr. Thabo Ntete, a chartered accountant, is new to the role and will use this audit to make his mark and recognition. He has, however, expressed concern regarding his lack of knowledge of IFRS 9 and 15, and is particularly concerned by the fact that the company will be implementing these standards for the first time in financial year 2025. What are we picking up?
I'm picking up the lack of knowledge for IFRS 9 and 15, which has a potential risk to the fact that he doesn't have the right knowledge to present these standards. So another thing that I'm picking up right now is that they're implementing IFRS 15 in 2025 for the first time. I don't know if maybe we need more context, but I feel like that's a bit off if they have been, if they don't have a revenue standard in there, but they've been operating.
Okay. The fact that they are implementing a new standard does not mean that they didn't have a standard before. Remember, before IFRS 15, the revenue standard was IAS 11. And if I'm not mistaken, before IFRS 9, the financial instruments standard was IAS 32. Or was it 39? One of the two. One of them is still there now, but the other one is gone. But when there's a new standard, it doesn't mean that there wasn't a preceding standard. Just like with IFRS 16, you have IFRS 16, which is the leases standard, but it doesn't mean that before that there wasn't a standard. Before that, the standard was IAS 17. Okay.
Yeah, it makes sense. Yeah.
Cool. But fully agree that there's a key in both of these things that we've highlighted. The fact that there's a lack of knowledge, and then also the fact that there's first-time implementation of a standard. Let's maybe unpack the last one. If you're implementing a standard for the first time, and this is where your sourcing of information from different areas comes in, that critical thinking, what needs to happen? Which standard offers guidance for first-time adoption of a standard?
IAS 8?
Yes. So there's an issue around the IAS 8 part, right? And also from an IAS 8 part, they require you to disclosure standards that are issued but not yet effective, which at this point, these standards were already effective, isn't it?
Yes.
So there would have been an issue in the disclosure around standards that are issued and not yet effective because they've not adopted them, meaning in their disclosure, they would have counted them as issued but not yet effective. So either the disclosure is inaccurate, meaning they would have listed incorrect standards, or the disclosure is incomplete, meaning that they didn't list it there at all. Whichever way you choose to swing, that would also be fine. But if you just say that the disclosure itself is misstated, that would have also been correct, because they are either lying and saying that they've implemented it when they're only adopting it now, or they've included it when it shouldn't have been included. Or there's non-compliance with IAS 8 and that paragraph or disclosure isn't even there. Which also goes to completeness. So again, from accuracy or completeness, whichever way you wanted to swing with the disclosure, that would have been fine. But yes, IAS 8.
So, Unati, I think it was the previous that speaker who spoke about the IFRS 9 and the IFRS 15. So
Yes.
I'm just realizing that I was writing my answers the way he's saying it, that like just stopping at the fact that the risk is that there's a lack of knowledge in IFRS 9 and IFRS 15. But then
Yeah, but why? Yeah, where's that why?
wasn't it supposed to add like the part where there will be errors or omissions?
Yes. Firstly, there could be errors, there could be omissions because there's no knowledge, of the standards. What else? Apart from there being knowledge, whose favorite standard is IFRS 9?
Financial assets.
Whose favorite, is it your favorite standard? Like if you had to choose to write an exam on a standard in its entirety, would you choose IFRS 9?
No.
Why not?
It's difficult.
It's complex. It's a complex standard. They talk things like derivatives and like embedded derivatives, non-embedded derivatives. Like, why are these derivatives going to bed? Like, what are you saying, right? So the standard itself is also complex, and because of its complex nature, there can be material misstatement over and above the fact that this guy says that he's got concerns because he doesn't have the knowledge. So we know he doesn't have the knowledge. We know that the standard is complex, and therefore there is a risk of material misstatement.
Hello, Unati. I hear that, but is it possible to also say, can this risk be also decreased by the fact that he's a CA?
It's not decreased because he himself has expressed concern. He's a CA, but he is acknowledging that IFRS 9 and IFRS 15, they're not my things.
Okay.
Okay.
I'm sorry. Can I ask, why are we concerned about IFRS 9 and 15 if they'll affect the 2025 audit, yet we're doing 2024?
From a disclosure perspective. Also, the fact that they're implementing these standards late, so they would need to do a parallel run. Remember, we spoke about IS 8 and how the fact that these standards are already effective. That means that in the previous years, they should have already applied those standards, but they're only applying them in 2025.
Okay.
Doesn't that mean that there's a prior period error? Because the accounting is wrong.
I think so.
Sorry?
I'm saying I think so. Was there is
Yeah.
need for them to adjust the financial statements in line with the requirements of IFRS 9 and IFRS 15 on the financial
Exactly.
statements for 2024.
Yes. Then if you piece information together, maybe this one is a little bit of a long shot, but just to show you how the analytical thinking is supposed to work. They are listed on the New York Stock Exchange, meaning that they would have already been audited according to SEC requirements, right? Being audited to SEC requirements at a group level will mean that the group has already adopted these standards when the subsidiary itself has not. In case you needed a little bit further confirmation. Okay. Hello.
So for the IFRS 9 and IFRS 15 consideration with SICA, in terms of the classification now around the risk, will it still be at overall, or it's now at assertion? Is it still pervasive of, or we are now talking to a certain line item?
Yeah, so IFRS 9 and IFRS 15 for me would be at assertion level, and it lines up nicely with what they wrote in the required, where they said for balances, which for me speaks IFRS 9, and then they said transactions, which for me speaks IFRS 15. Granted that IFRS 15 can have residual transactions like interest and stuff, depending on what's happening, and also granted that IFRS 15 can have balances if you've got like refund liabilities and things like that. But just from a very flat perspective to say IFRS 9 is financial instruments, which is normally on the balance sheet, and IFRS 15 is revenue, which is normally on the income statement, to say that that's my balance and that's my transaction. You can get very technical, like what I just said now, to say IFRS 15 also has balances and IFRS 9 also has transactions. But from the core of the standard, you're basically looking at IFRS 9 as a balance sheet standard and IFRS 15 as a revenue standard. Sorry, as a income statement standard.
Okay.
So that for me would be at assertion level, but it would be many assertions. In fact, it would be all of the assertions because it's the entire standard.
Okay. All right, thanks very much.
No problem.
Hi, Unati.
Hello.
Yeah, okay. Correct me here. I was speaking that there might be risk of material misstatement since Mr. Tabo is new to this role as the financial director, because I was thinking that he might miss some information in preparing those financial statements, and also the fact that he wants to make his market recognition. The financial statements might be fraudulently manipulated so that he makes his mark and get his recognition.
You could say that. You could say that. I don't think it would be wrong to have that view, and it's also using all of the information that is in the scenario. He is new to the role, and so yes, there is a risk of manipulation for that. I think maybe just to be kinder to this guy is that I would rather say misstatement because of the lack of knowledge, because he seems to be innocently admitting that, you know, he's worried that he also doesn't understand the standards, rather than to assume nefarious intent. But I suppose the same could be said when we talk about bonuses, because we always assume that they would manipulate so that they can get bonuses. But yes, I don't know. I feel like I want to be kind to him because he said he lacks the knowledge. It's not wrong either way. It would be a consideration in my opinion.
Thank you.
Okay. Be kind to people, please. Don't assume the worst. Have professional skepticism, but also be kind. I'm joking. Okay. So then they say RV Cures strives for good corporate governance. Sorry? Okay. RV Cures strives for good corporate governance and has appointed a fully functional board of directors that includes both executive and non-executive directors. The executive directors do not receive fixed salaries, but are remunerated according to a complex formula based on turnover and gross margins. Excuse me. Non-executive directors receive a fee for each of the meetings attended. The following persons hold office as directors of the company. We've got Ruth Vipunt, who is the non-executive chairman, I suppose chair lady, because they say it's a Mrs. Ruth, and also the managing director of RVPI. So the managing director of the parent company is a non-executive and also is the chairperson. Mr. Loon, which we know is the managing director. We've got a Mr. Sipongoma, who is the operations director. And then we've got Tabo Dete, who we said is the finance director. And then Mrs. Mantu Chabalala, non-executive director. Well-known former, oh, it is the former Minister of Health. I laughed and thought, why would they? And they actually say the former Minister of Health. Who of you guys still remembers Mantu Chabalala Msimang? Or am I revealing my age? Okay, I thought I was revealing my age. Jeez. Thank you. Okay. In any case, apart from Mantu Chabalala Msimang, what is interesting in this paragraph?
I can give it a shot.
Yes, please do.
So looking at the table, I noticed a few instances of non-compliance with King. The first one that identified is the fact that the chairman is not independent, and okay, they appear to not have gotten a lead independent. So yeah, that's an issue, a non-compliance
That's an issue
issue.
from a King perspective, yes. Okay.
Yes. And then secondly, there should be a majority of non-executive directors, of whom the majority should also be independent, which is not the case here, as there are only 2 non-executive directors out of the 5. And okay, I'm only questioning the independence of the one. So that's the second issue of non-compliance with King that I identified.
It would be valid to question the independence of the other one, because nowhere did it say that this person is independent, right?
True.
So it would very well be valid. Now, we're not going to list all of these King things because we're not writing a King question. But what is the impact from a risk perspective? What risk is being posed by the fact that, number one, there's no independence on this board, and number two, the majority are executive directors?
So I wasn't sure if it was a management integrity issue or non-compliance. I'm not sure how to.
So if you have issues with management's integrity, what are you suspecting? What could management do if they didn't have integrity?
They would do a fraudulent activity, maybe?
Yes, yes. So there's not enough independence. There's not enough independence to ensure that the board is actually operating with integrity. So you could have irregular and fraudulent financial reporting, and it can go unnoticed because everybody seems to have something to benefit from it because nobody's independent.
Okay, I see it.
Okay, so that's one
Yes.
thing. Then we've got majority executive directors. What is the difference between an executive director and a non-executive director?
The executive directors are involved in the operations of the business.
So if there's more of us that are involved in the operations and some people are not involved in the operations, those of us who are involved in the operations, what can we do?
We can maybe override controls, manipulate
which the
financial.
non-executives wouldn't see because they're not part of the day-to-day operations.
Yes.
Okay, so that's another one. Then our finance director, not the finance director, sorry, our managing director here, Mr. Loon. Weren't we told that he's a 25% shareholder also?
Yes.
Yep. 25% from an accounting perspective. If this was a company and not a person, wouldn't you say that the company had significant influence?
Yes, they would.
From an associate perspective, right? So because he's a person and he's not a company, it's not an associate, but he does still have significant influence if you unpack IFRS 10, which is control, right? It'll also then give you guidance on what's going on there. He's got significant influence. So he could also, as someone with significant influence, perpetrate fraudulent transactions over and above what everybody else can do. Or he could come up with policies and whatever the case is. Even if you think about it now, looking at the fact that there's no fixed salary, but they get remunerated on a complicated formula, can guess who came up with that formula? Isn't there an intention or a motive or an incentive rather to overstate your revenue, which will impact your gross margins because of this complex formula that they will be remunerated by? They don't get a normal monthly salary. The salary is dependent on turnover. We're not even talking bonus. We're talking salary, the bread and butter, the money that pays the bills is dependent on revenue. It's definitely incentive.
Agreed.
Okay.
Sorry, Natty. Would it be too far-fetched to link it to, like, related party transactions? Like, now I don't wanna like.
So you're not wrong.
Presume.
You're not wrong. You're not wrong, right? You're not wrong. What I would do also is maybe just expand a little bit, because if we are saying from a whole, we've got this issue around the fraudulent reporting and whatever, and then also we've got people who could potentially have related party transactions. Also not a very direct one, but because they said that we can talk about balances and transactions in the required, right? You could bring that in to say that you could have issues around the completeness of liabilities if you've got director loans. I think they've given us financial information. We'll look at the financial information and see what's actually there. But basically, based on the fact that we've got questions around the integrity, it brings into question the completeness of your liabilities and your expenses, the existence of your assets, and the occurrence of your revenue. So those are major things, because those things would also impact your gross margins. So I would put it in. Yes, you could bring it in from a related party leg. That's also fine. You could also bring it in from a general leg, depending on what line items you're seeing in the financial statements. Again, like I'm saying, one of those that I would tuck away. I don't think at this point it's, screaming at me. But yes, definitely something to think about.
All right, thank you. Because of the salary, I think it tells us now that if I'm a member in another company, I must disclose it, that in the same group or something like that, with the salaries.
Well, you don't even have to have been a director in another company. The fact that you're a director in this company already means from an IS24 perspective, you've got a related party because it's key personnel, which is directors, is included in the related party definition. And then over and above that, depending on the PI score, but the question didn't require you to go that far. According to the Companies Act, directors' remuneration would then need to be disclosed based on the PI score. I don't think this question goes into that much
detail. So if they don't say
but
that,
yes,
I
that
don't
would
need to
definitely
write
be
it.
something to. No.
Okay.
Remember, we can discuss broadly, right? And I mean, remember that the reason why we discuss broadly is that when you go and write the IAC, you're not going to get this question. So it's good to discuss broadly so that I can sort of try to help shape your thinking, if that makes sense. That's why I want to hear what you guys have to say so that we can say, okay, this would be applicable in this circumstance and that would be applicable in that circumstance. Yes, this class is about this tutorial, but more than this tutorial, it's about how do you enhance your thinking when confronted with information that looks like this, when you've been asked to do that. Or if you've been asked to do a specific thing and you're not sure in terms of which information would be relevant, how do you then start to think about that information? That's also why we unpacked what critical thinking and analytical thinking is in terms of that 1 mark. Yes, it's 1 mark, but that 1 mark is showing you how far your mind needs to go to obtain the 19 marks. Because yes, you can get 1 mark for having completed the question, and you'll probably get the communication mark, which is that Y1, if you have 1 or 2 things written there. But in terms of being able to drum up enough points, your mind needs to be open. And that's the purpose of this tutorial, to just broaden the thinking a little bit. Okay, so even if it's not valid for this one, the fact that you're thinking about it and that you're opening your mind, open it, but then just remember in the context of whatever it is that you're being asked to do and in the context of the other information that you've been presented.
Noted.
Happy? Perfect. Okay. Then they say RV Cures has encountered difficulties during the financial year 2024 owing to the following factors. Whilst the company has secured a number of profitable contracts with the Department of Health, our non-executive director is the former Minister of Health, and we've got contracts with the Department of Health. Anyway, the department has been forced to cut back on its orders, maybe because she's now the former Minister of Health, I don't know. Due to the recent economic turmoil faced by the country, which saw the downgrade of the country's debt and the deficit in the tax revenue collections, which led to an overall decline in public sector spending. Okay, so they're cutting back on tenders. The company and its products have received bad publicity following investigations into Ruth Vipon's activities in the United States and several European countries. Who, our chairperson, is doing bad things or has bad publicity. These investigations center around allegations that her companies have contravened regulations by marketing unregistered products as cures and/or preventatives for breast cancer. Despite these difficulties, the directors are reasonably optimistic as they believe that the Department of Health will revert to its normal spending in the near future, whilst they expect significant contributions to profitability from the company's acquisition in Exelon Propriety Limited. See below. We will see below just now, but what do we see up here?
There's a risk that the going concern basis has been applied incorrectly to the financial statements, triggered by the fact that they've received bad publicity, which could impact their revenue if people don't want to consume their products anymore. Yeah, that's one. And then secondly, the fact that there's a decline in public sector spending. And even though I don't know what the percentage of their revenue is attributed to public sector spending, but it could be significant enough to impact their profits.
Yeah, it could be assumed that any business that is doing business with government, that government would be a major customer. I don't know of businesses that do business with government, but then their major thingies are with the public, right? I mean, normally if you're involved in tenders, it's quite a government makes up a substantial amount. Even if 50% of the revenue is coming from government, that's major. Even if it was 30% of the revenue coming from government, how are you going to pay employees if you lose 30% of your revenue? That it's major. Government business is normally very big, and so you can assume that it's a large component by virtue of the fact that it's with government, even if you don't know the percentage, right? So yes, very valid. The decline in the contracts from government is bringing a significant uncertainty on the going concern because that's a loss of revenue. 1 point, agreed. I also agree with this reputational risk that you've brought up. Over and above the reputational risk having an impact on revenue, right? What is normally the case, and maybe if we think related party transactions again, right? What is normally the case between a subsidiary and a parent? What balances do you normally see between a parent and a subsidiary?
Like intercompany loans?
Intercompany loans. Now, when you have intercompany loans, maybe this is something from in practice, but I suppose it would be worthwhile to share it here. When you do your going concern assumption, or your going concern assessment, you look at a number of ratios. And one of those ratios that you would look at would be your assets against your liabilities. Your assets against your liabilities could be a specific number. And then in those liabilities, if you were the subsidiary and you had a loan owing to a parent, you could also remove that loan from your assessment on the basis that either your parent company would subordinate that loan. So basically, if you were in a net liability position, your parent company could subordinate the loan and say that they will not request payment until you are in a proper financial position to pay that money back, right? So when you're looking at your going concern in a group structure, you should consider whether or not there are intercompany loans that have been subordinated by the parent. Further than subordination, even from an IFRS 9 perspective, there could be financial guarantees. So if this company has external loans with third parties, the parent company may step in and place a guarantee on that loan to say, if my subsidiary cannot pay it, then I will pay the loan. Now, if they are investigating allegations for her companies, which includes our parent company, and the parent company is found to have done something wrong, and the parent company goes down, what does that say either about a subordination or about a guarantee? The parent wouldn't be able to stand in the subsidiary's place, right?
Yes.
And that in itself is a going concern risk.
Or they may lose everything because they have to find a way to pay back
because the parent can't assist
themselves. Okay.
Yes. Especially in smaller companies, because think about it from an economics perspective. This is again where that analytical and critical thinking comes in. From an economics perspective, a South African company would want to receive money from a company that is in London because of the exchange rate. So it would make sense that they would be loans because they can do more with that money in South Africa than what they can do with it in Europe. Okay. I didn't highlight this Department of Health part, and we spoke about the Department of Health. Okay. Then we get to this Exelon acquisition. RV Cures owns 100% of the ordinary shares in Exelon Proprietary Limited. So our group structure is getting a little bit more complex now, right? Because not only are we a subsidiary, we are also a parent, it seems, right? A startup pharmaceutical operation that commenced its operations during 2022. Exelon would like to be known for its linked dispensaries, family clinics, and comprehensive self-medication centers. RV Cures acquired, I suppose it would be 100% interest in the ordinary share capital of Exelon on 1 April 2024. The purchase price for the 75% interest in the ordinary shares was 5.2 million and will be settled in 4 equal quarterly installments commencing on 1 April 2024. Seems there's a typo there, but the typo doesn't change the understanding, whether it was a 75% acquisition or a 100% acquisition, unless they're referring to a step acquisition. But either way, RV Cures is the parent company for Exelon, whatever the percentage was there, between 50 or 75. And that happened on the 1st of April. And they say that there's going to be 4 quarterly installments. What do we pick up?
Okay,
when is 1 April? Loud. Yeah, please think out loud.
That the first
It's within the
installment is at year end?
Sorry, I didn't catch that.
Oh, it says it will be settled in 4 equal quarterly installments. So the first installment is at year end.
It's not at year end, it's within the financial year. Year end is 30 June.
Yes.
Oh, I hear you, because the 1st of April is the start
Yes.
of the quarter and 30 June.
Is
Okay.
the end.
Okay, but it says there that it will be settled in 4 quarterly installments commencing on 1 April, meaning that the payment will be 1 April, 1 July, etc., etc. If it was 31 March, you could then say it will be 30 June. You get what I mean?
Yes, I do. Okay.
Yeah. So the payment is due on the 1st of April. So the first quarter before year end, and then the next payment is due the first day of the next financial year.
Okay.
Cool. Always pick up when they talk about the 1st or the 31st or the 30th or whatever the case is, because that impacts your understanding dramatically. Okay. Someone else had something that they wanted to say, but wait. So if we've got the 4 quarterly payments, what are you noting about those 4 quarterly payments?
I'm thinking liquidity risk.
Liquidity risk.
Yeah, I don't know.
No, it's not wrong. We just don't know yet, right? Because we haven't seen their position. Maybe when we look at the financial information, it becomes a bit clearer. But if you wanted to go on a going concern perspective, you could also say from a going concern perspective, you worried about a major customer that has declined in their procurement from you. You're also worried about potential lack of parental support based on these allegations. Is it a good time to then basically incur debt, because it will be settled in these quarterly payments, meaning that they're not paying the entire amount of 5.2 million upfront. So there is potentially now this debt, because it's a payable, that goes onto the books so that we can settle in quarterly installments, this deferred compensation. So if you're going to put it like that, then you have enough context from the scenario. But just to say liquidity without maybe substantiating where you're picking the liquidity from, I think is a little bit stretching it. But based on what we've explained now, if you look at that, we do have enough from the scenario to conclude that. But because they've given us financial information, I would want us to also just confirm that position by looking at the financial information that they've given us. Okay. Hello.
Yeah, is it a risk at a session level to say that I think goodwill might be misstated
yes,
due to the fact that we have the management might fail to properly account for the deferred considerations.
Well, because
Or
of the
deferred
deferred
payment.
considerations, yes, it's deferred consideration. You're correct. The deferred consideration is a factor, yes, because if you think about that at acquisition journal, you sort of account for it a little bit differently. And because the balancing figure of your journal is goodwill, that would definitely be it. But just having acquired a subsidiary in this financial year on its own is also sufficient enough for you to bring in the goodwill. So I think if we were talking in terms of APC, if you brought the goodwill in and then you mentioned the deferred compensation, that would be what we call a high level of competence versus somebody who just brings in the goodwill because of the acquisition, we would just say that that's competence. So yeah, it's a much higher level than what is expected. But yes, definitely the deferred compensation plays a role because it forms part of that journal and the balancing figure in that journal is goodwill.
Thank you.
Oh, very good observation. Then the acquisition itself, guys, remember we said that consolidation is complex. And then we said in the beginning, because we were only the subsidiary at that point, consolidation is not our consideration. But now we've become a parent, like we've got kids. Consolidation is a risk. Now you can bring it in because you've got concrete info. And it applies to RVQs.
So would I word it that it's because what do you call this, at acquisition journals and intercompany elimination journals are complex?
Yes, I wouldn't mention the intercompany because at this point, okay, yeah, I suppose you could look at no, I wouldn't mention intercompany because at this point there is no intercompany. There's just the acquisition journal.
Unati?
Yeah.
I'm also thinking about, we are acquiring shares and then we have to first meet solvency. Don't we have also like a solvency risk?
Because we are acquiring shares. I wouldn't link it to acquiring shares. So when it comes to solvency and liquidity, I would keep it as what we said before, right? To say, given the fact that we're losing a major customer and the fact that our parent might potentially also be in a bit of trouble itself, to enter into a transaction like this with deferred compensation of 5.2 million is maybe not a good idea from a going concern perspective. I would leave it there. Purchasing a company doesn't have, and I can't think from the top of my head, there's no solvency and liquidity requirement from the Companies Act.
No, I mean shares, the shares, because we're acquiring shares. I don't know.
Yeah, where are you getting that from? Maybe let's trace the technical origin of your concern.
Remember, we are saying that RVQs are acquired 100% in the ordinary share capital. So we are acquiring shares of Exelon. I don't know. It's just me thinking. Maybe I'm going too much.
I think she's looking at it in a point where we are issuing shares.
Yeah, that's why I'm not picking up that point yet. Yeah, that's why I was saying maybe if you point me to the technical part of where your argument is coming from. Yeah. Okay, I'm not on the same page as that. But when it comes to discussing solvency and liquidity for this paper, if you wanted to discuss it, I would use the angle that I've just explained now. Okay. I'm not yet seeing the requirement. Then again, remember we said we do have financial information at the bottom. So maybe when we look at the financial information at the bottom, we can then solidify that statement by actually saying, well, look, based on the financial information that's there, actually solvency and liquidity is an issue. Okay. Then they say Exelon is audited by Knight Adder, the auditors of its previous parent entity. The view from the audit committees of RVPI and RVQs is that the auditors of all group entities should be the same and has requested that your audit firm propose for the audit of Exelon for the 2025 financial year. An instruction has been sent to the governance structures of Exelon to communicate this view. Your audit firm has only provided tax advisory services to Exelon during the past 2 years. Your audit firm is of the view that Exelon prefers to use Knight Adder for any non-audit assurance services because Exelon's current finance director was previously the audit partner of Exelon. The tax advisory services your firm provided to Exelon entailed assisting with the determination of the tax position for a highly complex and judgmental series of transactions. Your audit firm included a disclaimer in its tax advisory report to note that the accounting treatment of the series of transactions entered into by Exelon were highly subjective and the tax opinion should be re-evaluated should the accounting treatment change. That's quite a mouthful. Well, from seeing this, already they're telling us that this highly subjective and highly complex. So this complexity and subjectiveness is now coming into RV Curious's financial statements. Because remember that the acquisition is happening during the year. So yes, we've been asked to audit the 2025 financial year, but already at 2024, 30 June, we are going to consolidate because the acquisition is as at 1 April. The 3 months that we will be consolidating includes highly complex and highly subjective transactions. So that already brings in a risk of material misstatement. Agreed? Disagree?
Agreed.
Cool. What else are you guys picking up here?
The competence of Knight Adder.
Yeah. So the balances that we're going to take on were audited by somebody else. And we know that all of the group entities have the same auditors. So as much as we are all, or rather as much as we are auditing RV Cures, the SA operations, it seems that all of the RV Cures internationally is the same people. So we probably have branches in other, and they did say we were a multinational audit company. So we are auditing all of the RVQs, and they are the only one in the group who were audited by NITADA. So from an assessing competency perspective, the group auditors are happy with our expertise because we're all in the same company with just different components spread across the globe. But nobody's assessed this NITADA. Do they even have the competence? Okay. Then they tell us that RVQs has used the Impact Suite of Accounting and Enterprise Resourcing and Planning, which is an ERP software, since its incorporation, and your review of previous year's audit files reveals that although the accounting system is largely dependent on the computer system, controls have generally been found to be reliable. Few, if any, changes are expected in 2024. The records reveal that the company has a large volume of transactions, although recording is simplified by the fact that all suppliers and customers are based within the SADC countries and all trading transactions are expressed in South African Rand. Okay, so it seems that even though they're listed, the transactions are expressed in South African Rand. The point is just not clear if because it says here RVQs, it doesn't say RVPI. And then it says here that the company, it doesn't say the group. So yes, you see that one that we had in our arsenal about the functional currency, depending on how many points we've drummed up. I think at this point we've already got more than 19, but if you were lacking in points, I would then bring that one in on the functional currency, because at this point it's not very clear. And when you word it, don't word it as a matter of fact, word it that it appears that there's two different functional currencies. Sorry?
For auditing text, can't we have like this thing? Chekuti, we just look for papers. Ekuti, each week we just have like, we know Kuti, we're just going to attempt like a question. If it's going to be a question that is comprehensive, or if it's going to be a question, Kuti, this week we just want to look at a question in a substantive procedures and then deal with substantive procedures. You know, can't we have like something like that? Kuti, for text, we know, like, okay, the question that we're going to do this week is going to deal with gross income. We are mainly focusing on gross income.
It's supposed
you
to
know,
be on mute,
meaning
I
Kuti,
think.
that question has to be comprehensive. If it's going to have taxation.
Oh, let me. Okay, cool.
I have a question.
Hi. Sure.
Wouldn't the fact that like we have suppliers and customers that are based in SADC countries that make the exchange rate a valid point? Okay, you said it's a valid point, but like a strong point.
Well, it's saying that all trading transactions are expressed in South African Rand, so there's no translation because the transactions are in Rand.
Okay, so you're saying that the SADC countries are buying in Rand as well?
It seems that way.
Okay.
Because it says their recording is simplified by the fact that the suppliers and customers are based in SADC and they are trading in Rand. So they've brought it in as a simplicity to say that we don't have the complexity of exchange rates because everyone is using Rands.
Okay, I get it now.
Yeah, it doesn't necessarily have to be like believable context, but that's the information that they've given you. And I suppose it's because they didn't want you to stress and bring in those exchange rate risks because they wanted you to see other risks. Okay. Remember that the examiners live in their own world and they do things that make sense to them, but not always make sense to us.
Onati?
I'm sorry.
I just wanted to ask on that statement, which says that the records reveal that the company has a large volume of transactions. Doesn't it isn't it a trigger in coming up with a risk of material misstatement?
For me, the large volume of transactions, I would link to the deadline. Right. Because how are you going to audit this large volume of transactions if you don't have enough time? Then they are talking, I would also look, because normally when you have large volumes of transactions, if you think about like a shopping center or whatever, like your Woolworths and your Checkers and your Pick and Pay, those companies have thousands of transactions going through on a daily basis. So it's definitely a large volume of transactions. And normally when you audit companies like that, you rely on the IT environment. But they've already showed you here that they don't want you to bring that in because they're saying that they are dependent on this computer system and the controls have been found to be reliable. So they're already telling you that from that perspective, it's not a risk. But if this wasn't here, then yes.
All right, thank you.
Sorry, Unati. So now when they tell us that internal controls are working effectively, does that mean every other point that I've listed, like to say there's an internal control deficiency, can this reduce that? What I'm trying to
when
ask
did
is
we
that
talk
if we
about
have an
internal control
overall,
deficiencies?
if there's okay, remember the first stanza we talked about the manufacturing company together with the internal controls, right? So if I've written something along those lines that there's an issue there, would I then, instead of scratching out, say this would decrease my risk of internal control as the operation is operating effectively?
So
like, can I have
wouldn't
like
bring in factors that decrease the risk purely because the required is saying identify the risk. If it said assess the risk, you can then consider factors that could decrease. So then you would talk about what's increasing your risk and then say that in some areas your risk is mitigated because of this. And then at the end of I've seen a question that asked candidates to assess the risk. At the end, candidates were then required to actually provide an assessment and say that the overall risk at financial statement level has thus been assessed as medium, or it has been, and you don't get marked right or wrong for having said medium when maybe it should have been high or whatever. You just get the mark then for having concluded, because logically what follows an assessment is a conclusion.
Okay.
So if the required had said you should assess the risk of material, then also that other consideration from your previous colleague who said, because this guy is a chartered accountant, does it not decrease the risk? If they didn't say that he expressly showed concern for those standards, you would then have taken it as a mitigating factor to say, yes, IFRS 9 is complex, and yes, IFRS 15 is complex, but this guy is a CA, and so we are expecting him to be technically competent, and that technical competence should then decrease the risk when it comes to the complexity in the application of those standards.
Clear, thank you.
Okay, so it's all about how you word it, how you look at it, and what information you use to support your response. Okay. They then say a summary of the company's management accounts for the 9 months period from 1 July 2023 to 31 March 2024. So there's 1 quarter missing there, including budgeted figures for the full financial year 2024 and comparatives for the previous financial year 2023, is set out below. So this is the budget for the year. These are the actuals up until the end of Q3, and these are the actuals for the prior year. And then we see the different line items. The expectation here would be for you to have conducted a little bit of a analysis, just depending on how many points you've already written down and how much time you have left. That should be something that you would consider. But looking at the statement of financial position and the fact that we had discussions around solvency and liquidity, and we already noted the going concern issues, the fact that I've got this information, I would then calculate solvency and liquidity and make comments around that. And then link that to my risk of material misstatement at overall financial statement level, that the going concern assumption might have been inappropriately applied. Let's maybe look, because we do have a little bit of time. If you look at the budget, they've budgeted that sales will be 83 million, because they're saying that the numbers are rounded. So they've budgeted sales of 83 million. But as at Q3, meaning 9 months into the year, there's only 3 months left. They've only gotten just above half. So you can already see as well that there's poor financial performance here. It might even increase your risk of revenue occurrence, because at the end of the year, they might be pressured to push through fictitious revenue transactions that they would reverse. So again, because these ones are more analytical, you would then want to, after having exhausted the ones that we've gotten from the point blank obvious ones, see how many of those you were able to get, and then fill up the rest of your response, justifying by analyzing the numbers. Because you can see already that the financial performance is quite poor. And if we look at our total assets is 55 million. And then our non-current liabilities is 18 million, and the current liabilities is 27 million. 18 and 27 is not more than 55. So we are solvent. From a liquidity perspective, if you look at the current assets of 27, the current liability, we're not liquid. So there's a liquidity issue, but it doesn't look like there's necessarily a solvency issue. So not necessarily a solvency issue, but I mean, if you think about it, they say that the recommendation from a MANAC perspective, what is the recommendation when it comes to solvency? Aren't you trying to have a 2:1 or something like that? You guys are the MANAC boffins. I just lecture audit. Okay, maybe to simplify things without getting overly technical and talking about 2:1. If you look at the solvency ratio, they seem highly geared, isn't it? It looks like they do have quite a lot of debt in comparison. Because the bandwidth is 9 million. Because the total assets and liabilities is 55. So the bandwidth is only 9 million. They've only got 9 million equity. Okay. Are there any questions? No question. You guys are tired of me now.
I have a question. So
yes.
in terms of structure, how would one approach? Would you do, I'm just thinking, is line by line okay for every asset? I don't know, how would you have written this question yourself? Like, because there's risk at accession level, especially. Would I have done a line by line and pick accessions based on declining, or based on the fluctuations? How would you have approached it?
There's not much line by line that you can do, because here we don't actually have balances. We've got categories, right? We've got different classifications. So in terms of doing line by line for the balance sheet, that's out.
So for income statement?
For the income statement, on an assertion level, I've looked at the sales. That would have definitely been something to note from a revenue risk, right? In terms of saying that there might be fictitious sales towards the end of the year, or looking at it from the financial performance and then substantiating going concern. Whether or not I would have gone line by line and looked at all of these measures would be dependent on how many points I still needed. Because remember, we've answered a lot. We've really said a lot. We've said more than 19 things, and this thing is only 19 marks. That's why I say for me, what would have been important would be to capture all of the obvious risks that I was able to pick up from the verbiage being the wording. And once I've exhausted all of the information that's in the verbiage, you then come and you analyze the numbers. And then again, from a numbers perspective, you've got sales. You don't normally recognize risks I don't think I've seen an exam where you've raised a risk of material misstatement on cost of sales, right? Gross profit doesn't necessarily, it has assertions because it's a line item, but it's also not one of those that you would normally raise risk on. If you look at things like your gross profit and your profit before tax, you would consider those in terms of ratios, and you would look at those as part of your going concern. Then again, operating expenses, I don't actually have line items, right? I don't know what's in there, stationery, telephone, I don't know what's in there, and interest expense. So it's just about looking at what information is actually given to you. And the fact that this information is a bit cryptic, for me, it suggests that the examiner didn't want me to focus too much on it. Yes, there are things that they wanted me to pick up. When you look at income statement, your first thing is profitability, which is a driver or which is driven by your sales. They've given me a budget and then they gave me actuals. So the least I can do is compare the budget to the actual. Even if you look at last year, you can see that the sales decreased from last year. It doesn't even look like, they're going to make the same sales as what they made last year, considering that there's 3 months only left. See, it's basically from the information that I have, what can I produce that actually makes sense? And that should, so yes, they give you information because they want you to use the information. But then again, back to what we picked up when we talk about the required, they want you to actually use critical and analytical thinking skills. Just because the information is there, it doesn't always mean that it's relevant. So what of the information that I've been given is actually relevant? And that's why I read to you the IAC's definition of critical thinking. They say that you should seek information from various sources, assess the credibility, and determine its relevance and veracity. So being able to pick up which information is relevant is part of your critical thinking skills.
Okay. Like when I was doing the question, when I saw numbers, I was like, oh, a session level, oh my God, I'm not gonna do it. I literally left it because of that. So that's why
you didn't even look at the detail.
No, I was like, I struggle with this. Oh my God. So I'm thinking, would I be penalized if I dwell more on the risk of material misstatement? Like now we've raised a lot of risks there.
There's no penalty. There's no penalty. You've just got to have 19 marks, really.
Okay.
You get penalized if it says here, your part A is split between 2. I don't know if you've seen a required that will say identify risks of material misstatement. Then it will say Roman numeral I, overall financial statement. Then it will say Roman numeral 2, balance sheet and what. If it's split out like that and there's a specific mark allocation for both, then if you don't touch assertion level, yes, you will be penalized because there's a specific number of marks that's been allocated to it. But if you read a required like this, there's no specific number of marks that has been allocated to assertion level. So even if you don't make up assertion level, you're not penalized. It's just that you just don't have enough marks if you can't make 19. But if you're able to find 19 at overall financial statement level, then brilliant. And you would still pass.
Okay, thank you so much.
No problem. Any other questions?
My question was back to the whole critical thinking bit. so obviously you were going to be like researching like various sources of information, but how do you then determine, like, let's say you're writing up your answers in the exam. Like for me, I have this issue whereby, let's say I've written down my points for overall, I've written my points down for assertions, but then sometimes, like, let's say I'm trying to exercise critical thinking and I'm trying to maybe link some risks to other things. I'm not sure whether I'm wasting time or I'm actually mentioning things which are relevant. Like, is it something which is like up for debate from the markers or what? Like, how would you know whether I'm wasting time or you're actually maybe mentioning things which are relevant?
Okay, so the first answer to your question on how you know whether you're wasting time if you started this paper. Remember that if you've got 20 marks, you're expected to then apply 1.5, and I believe you'll end up with 25. You have then 25 minutes to complete this question. If you are still within the 25 minutes, then you are not wasting time. If this required had more parts, and for part A, you had 15 minutes, and you had already exhausted the 15 minutes and you hadn't started with part B, then yes, you are wasting time. That's the first answer, very simple answer to your first question. That's how you know you're wasting time, if you finished the allocated time. In terms of understanding what is relevant, I would cling very closely to what I keep saying about start with what is obvious. Where things are obvious, they are obviously relevant. That really is the thick and thin of things. Then when it comes to things that are up for debate, like I said to you, there's a suggested solution where the examiner believes that there are specific things that you should have mentioned and things that you should have brought to the fore, right? And those will be the ones that, in my opinion, from the scenario, are obvious. Once those are exhausted, the examiner does cater for some people who would have thought a little bit further and made some assumptions which could have been reasonable based on the information that was provided. Those marks are then also added to the suggested solution. Then what actually happens at the IAC and also at the APC, in fact, in any exam, even in high school, that's what happens. They do something called a test batch. They will take maybe 5% of the scripts. They will mark those 5% scripts, and then against the initial suggested solution, right? Against what the examiner believed was relevant. You've got a series of markers who are doing this. There will then be a markers meeting. In the markers meeting, they will say, from my population, there are candidates who brought this point forward. And if I analyze the scenario, I believe that this point is relevant. Those points then get added afterwards based on the initial population of what candidates have written that the examiner had not thought of. That's why I'm saying, and if you listen to my sequence, I started by saying we have the obvious ones, which is what the examiner brought in. Then the examiner thinks about, with the information that I have reasonably, what else could be construed from this information, even though it's not obvious. And then right at the end, the markers come and say, no, but this is also a valid point, and that is also a valid point, and we saw candidates saying this, and we saw candidates saying that. Those ones bring them at the end. And from an exam technique perspective, it then becomes important that you also answer using the same approach. Start with what is obvious, then go with what is plausible, and then at the back, go with what is debatable.
Okay. All right, makes sense.
Alrighty, guys. We have 1 minute left. If there's another question, I'll take one more question. But other than that, I would say enjoy y'all's evening. And as far as I know, I don't think I have classes with you guys this year. I think I'll only see you guys again next year. So I suppose have a Merry Christmas and a Happy New Year. And remember to study in between enjoying the festivities, because January is around the corner.
Thank you, Nati.
Thank you. You too.
Thank you. Enjoy your Christmas as well.
All right, thank you.
Thanks. Bye, guys.
Bye-bye.
Bye.
Bye, everyone.